This interview is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome to Cambridge House Live. I'm here at the 11th Annual Silver Summit in Spokane, Washington, and I'm joined by David Morgan. You may know him as the Silver Guru. He's the publisher of the Morgan Report. Welcome, David. It's great to have you here with us again.
Thank you, Vanessa.
David, let's start out by talking about some of the recent events we've seen. What do you make of Janet Yellen's appointment to the Fed?
Well, what was it said at the summit yesterday? If you're screaming, you should be doing something. If you're yelling, you should be selling. Corny joke, but Yellen, we did a write-up on her in the Morgan Report, a brief one, but if you think Bernanke had the pedal to the metal as far as loose monetary policy, you've seen nothing yet.
Really?
I refer to Helicopter Ben and Supersonic Yellen.
Wow.
Having a bit of an aircraft background. The Concorde's been in mothballs for years, but a supersonic 2.2 Mach jet, that's what it's going to take with the amount of money that Yellen's going to print. I'm being a bit facetious, but she has a belief that's invalid from an Austrian economist perspective, and she doesn't really think that you can overinflate an economy. And that's a bad way to approach it because history has proven her wrong. I hate to call anybody at the level that she is at the Fed, and I think she's got a great heart. I think she's well-meaning, but I think that her belief system is invalid. So I am afraid that as we go further down this trek of trying to cure a debt problem by adding more debt to it is going to blow up. And it would happen under anyone's watch, to be fair to Janet Yellen, but she is the most dovish of anybody they could appoint. And I think that Barack wanted to have Larry Summers, but there's such a ill feeling about Mr. Summers throughout even Wall Street that he quickly was swept to the side, and we all believed that Yellen would be in, and she is.
It's amazing. So it might actually happen that instead of tapering, we could actually see more easing.
Well, they're going to play the game of moving the market by rhetoric. They're going to say, oh, we need to taper, or tapering's around the corner, or this or that, and they might rename the QE to something else, or there's lots of games they can play, but the fundamental facts remain the same. You can't cure a debt problem with more debt, no matter how you rename it. And if you tone it down, and what people don't really know unless they look into the real hard numbers, is this $85 billion per month that they've committed to. Usually that's the minimum. They get money back through the Fed by what they have in the market, meaning their investments, which are in a paper chase, but they earn interest on those investments. And if you look back a couple of months, they contributed wasn't 85 billion, it was 114 billion. So, they're just continually to pour more money. Of course, the big question becomes, I'm sorry I'm taking over the interview, is, well, Jesus, David, if they're using this much money, how come we don't see inflation? And it's not a function of how much money you print. It's a function of how fast that money turns over.
The velocity.
And that's called velocity of money.
Interesting. So what do you think just overall about quantitative easing? Is there any way that it can actually help create jobs like Yellen is saying?
Well, that's the big thing to keep the public involved is like, oh, we care about you, and we want more jobs, and we have your interest at heart. No, the whole thing is about saving the banking system. The Federal Reserve has a mandate. It's a private banking consortium. Their whole edict, their whole mandate, their whole purpose in living is to keep the banks alive. But it sounds good when you're in front of the public camera to say, we want to increase the jobs. We're going to keep on this easy monetary policy until the unemployment figures get to this level. We'll let the data dictate what we're going to do. And they sound very liberal, very progressive. We're going to really help the poor guys out. But no, they're re-liquefying the banks because they were insolvent. They were not valid entities. They couldn't stand on their own feet. And of course, it was said, done. It's caused more consolidation into the banking system. It's got fewer players in the game, which makes the system even more risk. The way you spread risk is to diversify. You move it into more entities. They've consolidated, so there's less and less. So now one of these too bigs to fail does fail, whether they like it or not, which is a possibility. Then they might not be able to come to the rescue as quickly as they did in 2008.
David, what's your thought? What are your thoughts on the U.S. government shutdown that we just saw? It's behind us now, but just wondering what your opinion was on all that.
Well, I'm very opinionated on almost anything. It was a ho-hum, hee-haw, and it was ridiculous. The government wasn't shut down. The only thing that they shut down for the most part, and there were people that were hurt. I'm not going to be insensitive here. But, like the national parks, one of the few things that actually has some merit in my view, it's like the national park system, and they closed those down. Come on, it's ridiculous. But that's really, the majority of what happened. And yeah, there were some people that were hurt for a while, but I mean, the part of the government that probably should be tapered off a bit, we're fully functioning. You see any Congress critters, get barred from a paycheck or anything like that.
Right. Well, I guess one upside that could be said is Barclays is now revising some of their estimates on when they saw the taper from December to March, just because they're seeing that now there's going to be a loss in consumer confidence and, basically just overall confidence in the U.S. government from what we just saw. Do you think that there's a loss in confidence in the U.S. because of that?
Well, if you go back and look at my work on the internet, and a lot of this stuff is for free. It's not for fun. It's very serious. But I wrote an article called Dollar.com, and it was a couple of real pertinent points. One about what the .com industry was all about, but it was also a play on words with Dollar.con, C-O-N.
Right.
And I wrote about what a con is and what a confidence man does. And the whole system is based on confidence, and you use that word 3 times. It is. It's a confidence game. And what we're trying to do is instill confidence that we are the best looking horse in the glue factory. And that's a good analogy you've heard before. The dollar looks great compared to all the other horses, but we're still in the glue factory. It's a terminal case. No fiat currency has ever stood forever. They've all failed. No paper monetary system goes on. There's one that the Magambo guru does, and he does an interview with Mike Maloney. And he's much more animated than me, and I'm not exactly static. And he talks about Addison Wiggin getting hired at Agora, and he was tasked with looking at all the currencies that had failed, and he went by alphabetical order, A, B, C. By the time I got to C, it was something, I forget the number, it was like 1,550. He goes, oh my, 1,550 have failed. And he said, letter C. And I'm imitating the Magambo here.
Right.
But it's true. So what happens, and we don't know the future exactly, but they're continuing to pretend that we have confidence when the market clearly shows that they're losing confidence day after day after day. And so anyone that's really cognizant of something being wrong, and I think with the internet, just even a cursory examination of the facts can draw their own conclusion. And what that means is if you think that someone else is responsible for your life, you're not thinking very well. You've got to take your own action. And, to go on a tangent, that's what made this country great. It was self-responsibility, independence, and rule of law that protect you with your own ideals and ideology. As long as you weren't infringing on the right of others and did what you say you were going to do, the system worked great. It's been very, very convoluted from that point in time till now.
I think that's a great philosophy. And just looking at moving over to silver, are we seeing a squeeze now on the silver supply? There's people talking about on the gold side, the Shanghai premium, but what are we seeing on the silver side right now?
Not as much. I think gold, I always believe that it would probably be the silver side where you'd see the discrepancy between or distortion between the physical price and the paper price. And that did happen in 2008. But now it looks like it's more on the gold side. You're seeing China buy an annual mine supply year over year. Well, in theory, you could buy all the produced gold in 1 year in one entity, like a nation state like China. But you know what? India is doing something almost as much. And then you take the public at large or trading funds at large with the public, and you're talking maybe half that much. So wait a minute, that's 2.5 times the annual gold supply taken on an annual basis. That cannot continue forever. The big movement of physical gold going from the west to the east is well documented. The distortion from entities I won't name that are supposedly at the top of the heap as far as accurate reporting on what the movements of gold and silver are questionable at best. So what we know for a fact is that the demand for physical gold in Asia is very strong and continuing to be strong. So one of the premises I had from day one was that paper doesn't equal real. My mantra, be real, get real, buy real. It hasn't changed. So there'll be a day, and I think the day will happen more in gold than silver. Again, I thought the reverse had, some time ago, but now it looks like, and gold's much more popular. Gold's much more mainstream. And let's face it, if you want to really compact your wealth in a small area. I could put $40,000 worth of gold in my pocket and walk down the street and no one knows I've got it but me. But try putting $40,000 worth of silver coins in your pocket,
Yeah.
you're going to have a hard time walking down the street.
Yeah, you might need a wheelbarrow or something
two.
there too. When do you think that we're going to see investors' appetite for silver come back in a real way?
Yeah, that's a great question. I mean, it's a tried and true answer. The cure for low prices is low prices. You need a maverick thinker. I'll use myself as an example, excuse the ego, but I was there pounding the table when silver was the lowest inflation adjusted price it had been in recorded history.
Right.
And no one was paying attention. I should say no one. Warren Buffett was paying attention. He had bought in that range. Bill Gates, Bill Gates bought a great stake in Pan American Silver. And like him or not, George Soros started Apex Silver Mine. So, the billionaires were buying, not the millionaires, but the billionaires. But the general public was a big ho-hum. Silver had been under 5, had been a 20-year bear market. Why would I buy something that's the lowest price it's ever been? Which proves my point. People don't buy bottoms. So it takes a unique, maverick type of thinking, outside the box thinking, even within the space we're in of contrarians. It takes a contrarian within the contrarians to do it. I think it's a tremendous opportunity, especially on the mining share side. We're at a level that's a once in a lifetime opportunity. But a lot of people are in the sector, so we need new people in the sector.
Right.
How does that happen? I don't know exactly. But with the internet and the right interview, the right whatever, maybe when Yellen comes in office, I don't know. There could be, not would be, but could be a triggering point that something happens in the administration, something happens on the war front, something happens in a major bank, something happens in the stock market, the bond market. I mean, all these things are interconnected, tied together. And it could be a trigger event that has nothing really to do with the silver market that frightens people or elates them. Maybe it's a new technology that uses silver in a battery. I don't know. That all of a sudden the consciousness shifts quickly and there's a big move into it. And once that momentum starts, once that spark is lit, especially in silver, nothing can move like the silver market. It'll ignite and take off. Now, am I forecasting that to happen? No, I'm not. I think we're in a rebuilding process and it'll go. That ignition I just described, that will happen, probably at the end of the market. But there's no reason to rule it out completely. Because look, the one thing we know about capital markets and investing is it's human activity. And human activity cannot be predicted.
Absolutely. Well, David, it was a pleasure as always having you back, and thank you so much for your time.
My pleasure, thank you.
Thank you.